Hello and welcome to a very important CNBC-TV18 conversation. My guest is Dr. Roland Busch, the President and CEO of Siemens AG. Well, I'll tell you why it's a very important conversation. Siemens AG is seen as the bellwether by the global economy as, an indication whether the global economy is chiming well, because it's practically the capex company of the world. And Siemens India is also seen as the bellwether of India's capex cycle. And as a sign of the times, Siemens India in the latest results announced a 70% rise in net profit. So it looks like the Indian capex cycle is good. But I'd like to know about the global capex cycle as well. Dr. Busch, thank you very much for your time.
Thanks for having me.
Well, I'm going to start with this global geoeconomic environment. Everywhere the incumbent governments are getting voted out. And after the presidential debate, there is a bit of a change of mind even in the United States. If it indeed is a Republican presidency, do you see a big change in Europe itself, in your ecosystem for Siemens itself?
So I would not see a difference. I mean, we worked with all governments in the past successfully, also with the existing ones and that one before. So if that, and you're reflecting on the United States, if that's a shift, we do not believe that there's a big change in the American market.
Well, actually, Trump has said that he will negotiate out of Ukraine in a day, even before the Jan 20 presidency.
I know, I come to that.
That's why I'm asking whether...
No, I come to that point. I was just starting and talking about the American market itself. Yes. And there might be a little bit less support for green technologies, but if I talk to my counterparts, to the industrial companies, they would continue investing into any kind of green technology, because this investment goes beyond a 4 or 5 years tenure of a government. Yes. So therefore, this bullet is out of the train, and I do believe that the American market, I don't worry too much, which is, let's take the box here. On the other side, where I do believe there would be an impact, it's foreign policies. Yes. And the question of Ukraine, the support of Ukraine on the one side, but also what we would love to have a kind of a predictable government where you know what's the trend, and what's the frame. Because allocating capital, normally you need at least 2 years, yes. In some cases maybe 10 years for the return. You want to have a stable system.
That's right. Of course, we do not know how things will go till the last vote.
Sure.
Is polled, but things changed after the debate. The other thing is the increase in tariffs on Chinese goods. Trump has said that all imports into the US could be charged 10% more in terms of tariffs, and Chinese goods 60% more. And already EU tariffs are kicking in on Chinese goods. Do you worry about geo-economic fragmentation, and will that impact business, or will that be actually positive for business because jobs are shipped back home?
The interesting answer is both. Oh. The reason is, in principle, we are not a fan of tariffs. We believe that tariffs just make our economies, inflation go up.
Yes.
You need to have the most competitive costs and see how that goes, and how you can, coming back to, for example, the green transformation of the energy sector, we want the cheapest and best technology available on the market and deployed as fast as possible. Global warming is a global task. So this is one dimension. The other one is, now I'm talking more a little bit selfish about Siemens, is we are one of the most global companies in the world. We are localized. We are localized in the United States, in India, and in China, and in other places in Europe as well. So therefore, if there's a shift for more, we call it localization. Yes. It's a global world with more local content. This requires new investments, greenfield investments in different places. And that's tailwind for Siemens, because whenever you want to build something new, a new plant, recommendation number one is make it as digital and as automated as possible in a world where you have less and less labor. So therefore, why wouldn't you go for the latest in digital technology? And Siemens is the place to go. Is it brownfield? Is it greenfield? So for us, it's tailwind. But needless to say, we believe that a low tariff environment would be a better one.
Well, so you have tailwinds even if
yes.
If jobs become,
yes.
onshored and friendshored.
And you see it in India. I mean, India is on the receiving end. If you talk about reallocation of manufacturing, this is the place to be, and look at our business, how it grows.
You said labor shortage, and that's why I wanted to tell you, welcome to India. We have labor here.
Here, my learning in the last days, I was here talking to our partners and customers, is actually there's no real labor shortage. It's a shortage of skilled labor. So education and training is the name of the game. You have to put more emphasis on it. We are investing in that one too.
You speak like a macroeconomist. I should get you on macro topics as well. But to come back to the Indian macro situation, the capex cycle clearly has benefited Siemens. 2 years ago, you had that big 260 billion rupee order for trains, and you're still doing a good over 50 billion in terms of orders per year. These are largely government orders. Have you in India seen the private sector take on the baton for capex?
Yes, we do. We see, there's a lot of development of bringing new manufacturing to India. And new manufacturing could be more complex products, electronics and like. But it's also about green technologies, semiconductors, batteries. We see also the car industry looking to a 7 million car market, one of the largest one in the world. So therefore, there's a lot of, and when I talk about these industries, don't forget the whole supply chain, tier 1, tier 2. Many of small and medium-sized enterprises are pulled by these investments. And that's what we see in our business too. It's a really strong growth in electrification. All these plants need to be electrified. Low voltage, medium voltage products. Data centers are also mushrooming here in India. Absolutely. We are serving these as well in any kind of electrical equipment, but also in the building automation, climate control, energy efficiency, but also in the automation space. So
you're saying that private sector is also giving Siemens orders. It's not just government.
Yeah.
Okay. Your first order, Sunil Mathur, came with that big 260 billion rupee order for trains. But you all didn't come to the bid in the second order, which was about 300 billion rupees. Will you continue to bid for train bids, which will hopefully come in the new government?
So the government in the last 5 years electrified, this is a record number, 65,000 kilometers of railway electrification. Another 10, 15 to go, and then the whole country is electrified. Congratulations to that. This is really laying foundation for a much better freight, but also passenger transport. So we are invested there. We help electrifying. Signaling is next. We are also putting signaling in place. With the right signaling, you can even double the capacity without laying a new track. And on that backdrop comes, of course, rolling stock. So we are very happy about delivering now 1,200 locomotives with 9,000 horsepower, great business, including the maintenance. This is just the start. We are very good in propulsion systems, which we deliver to our customer, which they are using from commuter trains. We have bogies, which we deliver to our customers, but to our needs as well. And the next wave is definitely making own trains, metro trains, but also commuter trains, not only for India, but also for the export to other countries.
Now, the pointed question I have is that obviously 2 years ago your order book was 310 billion or whatever, because of the railway order. And then last year it came back to the normal 52 billion. Do you see this substantial jump coming again? Will you go in for bigger orders, or even this 50 billion, does it go to 60 billion? Is that the plan?
No, I hope that we will see that again. The rolling stock business is cyclic. You can get a big order and then you jump up and you go down again. So therefore we're measuring that more in rolling for years or something like that. But we definitely want to see this, maybe also a target for my local management here. We definitely want to see that going up, and this peak is not only a peak, but that this is more and more shifting behind. If you look at the demand, if you look at the projects coming up, I would say, and we take a fair share of that, then this comes true.
Okay. No, this 52 billion, let's forget the peak. This 52 billion, does that jump at a 10%, at a 20%? What is the internal target?
So we want to grow at least with the market. So we believe, so in our market assessment, it's not macro GDP, it's now our market assessment. The Indian market for the next 5 years grows by a little bit shy of 10%, so 9 point what. And we want to take market share. And now you can make your math.
So more than 10%. All right. How are margins? You all did well. Now I'm talking about Siemens India. You did well on margins. I think about 250 basis jump in margins. You think the year ahead looks good for margins? How are your commodity prices doing?
So I hope so. I think we do not guide. We don't guide on margins, but we have a great team on the ground. Winning orders is one thing. Executing them flawlessly and with a good margin is another one. We have very strong local product management. We have also strong manufacturing. So therefore, turning now an order backlog, a healthy order backlog, into good profitability and cash flow is what we did in the past, and we continue.
Let me come to the small, intercompany arrangements. Siemens Energy sold stake in Siemens Limited to Siemens AG. So now you own 69%. Was that just to help Siemens Energy out of its intermediate financial problem, or was there any other goal in increasing the stake?
No, there were actually, number one, the whole discussion was indeed triggered by how can we provide very quickly cash for Siemens Energy, and we did. But the other element in it was that once we have that step and we bought them out, by the way, the agreement is they buy it back later on. This is clear because we don't want to sit on it, but that triggers now a kind of autopilot process to really disentangle Siemens from Siemens Energy also in India. And this autopilot started already, and we go. With Siemens Energy being demerged? It will be a spin-off, so that you have two companies with the same shareholding, and then we can get out.
No, I'll tell you why I'm asking you this question. You must have heard that Hyundai is doing an IPO in India of their India unit. The Indian stock markets are in a giving mood.
Yeah.
So would you want to use that? Would you want to keep 69% in both Siemens Energy and Siemens Limited? Or would you want to give some stake in the Indian, divest here, simply because the market's in such a good position?
Our ultimate target is obviously to dilute our share from Siemens Energy down to zero. This is what we committed to the market on a global basis. Same here on a local basis. That's what we're going to do, and this is the whole meaning of this exercise. What we're going to do. So we will let Siemens Energy go. They stand on their own legs. Exactly.
But will that entire 69% be sold to Siemens Energy, or will divestment also be a part? Again, because you're likely to make a lot of money. The market is happy with valuations.
Absolutely. This is depending on what Siemens Energy is going to do. I think the likelihood is that this goes down, but this is another question. At least from our part, it's clear we want to get out of it, and we will get out of it.
Okay. I hope you know you're trading at 70 times. I'm sure you do.
I do know.
70 or more.
Isn't it great?
So it is great. That's why I was asking. It's a great time to cash in, and Hyundai is showing the way.
Oh, yeah.
So we are asking all multinationals if they are tempted to come to the Indian market. You will consider that.
We are very happy with the development here, I have to say, and hope we can continue.
No, I'm asking whether you will divest very clearly.
On Siemens Energy?
To the market.
The point is, we are divesting our shares in order to bring it down to zero. The receiving end is Siemens Energy. The assumption is that Siemens Energy will definitely go for 50 plus 1, and the rest might go to the market. I don't know, but...
that is their decision. Yep. Dr. Busch, let me stop you there. I have more questions, but we have to take a commercial break. We are back in a jiffy with lots more questions for Dr. Roland Busch on the Indian capex cycle.